Hello and welcome to the Econ MT podcast series, part of the Econ MT project and AgEconMT.com, and a production of the Department of Agricultural Economics and Economics at Montana State University. I'm Anton Beckerman, and today I'm joined by Kate Fuller. Hi, Kate.
Hello.
She is an assistant professor and an extension specialist here in the department, and today Kate is going to talk to us about land values here in Montana and beyond. But before we get started with that conversation, this is part of a podcast series that we're putting together, and it's a series of podcasts that are related to our Ag Conference, which is usually held sometime in the first or second week of November each year. We've been holding 11 of these so far, and it's an opportunity for our department to invite leaders in the ag industry, producers, agribusiness managers, lenders, and others who are interested in the agricultural sector in the region to join us to hear about our research and to hear about things that we think about when we consider the things that are going on with the agricultural sector. And it's also an opportunity for them to ask questions that they have in relation to what they see in their part of the world. So it's a great ag conference, and this year's theme was looking at variability in ag markets and how that variability is manifesting itself, whether in wheat markets, livestock markets, land values, pulse markets, etc. And so we've got a series of these episodes that we'll be posting over the next several weeks. And of course, you can find all of them in the podcast archive on AgEconMT.com. And if you subscribe to our podcast on iTunes, of course, you will have it as soon as we post them. So without further ado, let's get into talking about land values with Kate. And Kate, tell us a little bit about the type of research that you do and the type of extension work that you do in Montana.
Sure. So my position here is an extension position, which means that I spend a lot of time doing extension programming around the state or through distance delivery like we're doing right now. I also have a little bit of a research appointment, which means that I publish papers, or at least I try to. And
we all do. We all try.
And so I kind of, my research mix has been a little bit eclectic. I'm really interested in ag pests and diseases. I came from a background in California where I was working on wine grapes a lot, which I'm still working on a little bit here, but our wine industry is a little bit smaller in Montana.
It's emerging? Is that the right term?
It is. I went to the Montana Grape and Wine Association meeting last year. But part of that is looking at land values and the determinants of land values, which is also part of my extension programming. So what I go on the road and talk to people about.
So when you go on the road, what are some of the questions that you get? What are the common questions that you get about land values?
All right. So when I go on the road, one of the common things that I do is show people where they can get lease rate information. So NASS, the National Ag Statistics Service, collects average lease rates for every county in the country. Montana is no exception. They catalog them in a variety of different ways. So for pasture leases, you can look at them per acre, per cow-calf pair, per animal unit month. There are a bunch of different ways that you can look at that. For cropland, it's basically divided into per acre rates that are either irrigated or dry land. So I put that information up. I show people where they can get it. One of those places is at our website, which is msuextension.org/aglease. And I think we'll put a link to that up with this website.
Absolutely, and it's already, if you go to the AgEconMT.com website, it's on the resources page, but we'll certainly link it from this podcast as well.
Yes, always more.
Always more.
Yeah, so I do that, and then I kind of talk to people about what they think about those rates. So one thing that I commonly do is ask people a question. I do it with clickers, so they can respond anonymously. And I asked them, do you think the rates seem too high, too low, or just right? And people pretty much, no one says they're just right, which you can imagine. People either say they're too high or they're too low.
I guess we can guess who those people are.
Right. So oftentimes tenants or people that are looking for land to lease will ask why the values are so high, and landlords or landowners will ask why they are so low.
So why don't you tell us a little bit about what's been happening to these land rental rates, land values in general. Let's start with rental rates. What's been going on in Montana? What's been going on maybe in other parts of the country to give us a perspective of kind of the current trends?
Sure. So you talked earlier about kind of the variability in these markets, which was the focus of our ag conference this year. And one question that I've had recently is kind of why isn't this happening in the land market? Because across the U.S., so U.S. averages as a whole, and for Montana as a whole, both land value and lease rate values have been relatively flat, considering these kind of huge swings we've had in our most important ag markets. So like I said, Montana and U.S. pretty flat. So for cropland rent in Montana, we had pretty much a 0% change from last year to this year. That's true for the U.S. as a whole. In pasture, we saw a little bit of more variability. So Montana declined just a couple of percentage points. The U.S. as a whole actually increased just slightly. That's masking some more variability in certain parts of the country. So in parts of the country where we're really grain focused, we've had a pretty rough couple years, and those rates there, so like the Midwest, those have declined a little bit. In other parts of the country, in particular California, recovering from some of the drought that they've seen, they had rates that increased quite a bit, so about 10% year over year.
So that's a lot. So what's been going on in Montana that we've been so flat?
Yeah, so I think it's been a real mix of things, right? So on the crop side, we had a pretty rough year here in Montana, and we didn't see a huge change in those rental rates, and I think some of that's probably just the lag between when things happen in the markets and when people adjust their rental rate. Another driver may be that we do have some of these really quickly developing areas like the Gallatin Valley where we are, and kind of Kalispell, the Flathead Lake region. We've seen those rates increase faster than in other parts of the state. And I think part of that is really the opportunity cost of holding that land in agriculture, because it really, in a lot of cases, could be developed for housing or something else. And then on the pasture side, so we have a lot of pasture land and cow-calf production. That's kind of allowed us, we're maybe a little more diversified than some of the other areas of the country. And in the last year in particular, we saw cattle markets look a little bit better than they have in recent years. So for people that are holding both cattle and cropland, that diversification was probably a pretty good strategy in the last year.
But to give some perspective, Montana land and rental rates are fairly low, right, relative to other fairly large crop and livestock production regions. Is that right?
Yes. So we are one of the lowest rental rate states in the country, and that's not to insult Montana land, but in per acre terms, our land is less productive than in other areas of the country. And that's part of the fact that we get 12 to 14 inches of rain every year, and you can't produce as much as when you get 30 to 40 inches of rain. So I think a lot of that is just dependent on just fortune, and our weather is a little bit drier than others. So and that type of
productivity and decreased productivity is captured in the land values, which I think is why we see those lower values.
Yes, exactly.
Yeah. So we've seen stability in the land value and rental rate markets. What does that say about Montana's ag economy? Are we more stable than other economies like the Midwest states, the I states, where we've seen 10 to 15% drops in land values after the big land value bubble? Or should we not pay attention to the fact that ag land values are stable? Is there any relationship between the land value markets and sort of the ag sector economy as a whole?
Yeah, so that's something that I think is really interesting. So land values we typically think of, or ag land values we think of as a mixture of what you're going to get off of the land in terms of revenue or other types of returns in the current year and looking forward. So the fact that these haven't really dropped off indicates some optimism for our markets, which is kind of a bright spot because this year has been pretty rough. But I think if we look to the land market as an indicator, it's an optimistic one for Montana.
Okay, so land values are relatively low in Montana because of potential productivity constraints, but there's another measure. It's real estate value, and why don't you tell us a little bit about that, what that measure is, and what that's been doing over the past year or so?
Sure. So farmland real estate values have kind of leveled off over the last year or so, or if we are to account for inflation, they are pretty much flat. So for both the U.S. and for Montana, we're just between 2 and 3% increase in farmland real estate values. And this is a measure of if you were to sell your farmland, what it would be worth.
And so there's been some research on the fact that farmland may be worth more if it's closer to some amenities or it has certain characteristics. Can you talk a little bit about that research? Because I know you've looked at it much more than I have, and then maybe talk about, have you seen any of that transfer into Montana real estate values, or are we truly just looking at pure productivity and Montana is an outlier to everywhere else?
Yeah, so as I mentioned earlier, we do have these areas like the Gallatin Valley or the Flathead area where we've seen ag land value grow faster than we might expect just based on other factors. And so I've been pretty interested in this because there is this body of literature looking at the non-ag determinants of ag land values. And a lot of people have worked on this. There's a paper that I particularly like that was published in our kind of big journal, the AJE.
American Journal of Ag Economics, that's right.
There you go, in 2014 by Borchers, Ift, and Keithy. And they looked at non-ag related drivers of ag land values. And among the most important, they found population density. And then the kind of big ones were both current development potential and future development potential. So in those studies, those were among the most important drivers of that ag land value. And so that was something that I was really interested in looking at for Montana.
And you've seen those factors be relevant to, say, the Bozeman area or the Gallatin Valley and the Flathead, and that's just people coming in and wanting to be in those areas, and that's just driving up prices?
I mean, anecdotally, yeah. So you've probably heard people talk about like that as well. But in terms of empirically, it's a little harder for us to look at because we don't. So here at MSU, we have access to this data set that we get really nerdy and excited about. It's called the ARMS, and it includes a whole bunch of information on farmland revenue and costs, where the farms are located, the different types of farms, the size of the farm. You get the picture. It gives a lot of detailed information. One thing that it does not do is ask people about the current and future development potential of the land, which is something that this Borchers, Ift, and Keithy article that they were allowed or that they were able to do. So we can't do that. we can look at rapidly developing areas relative to the rest of the state. And we do see the crop districts where Bozeman is, so the Gallatin Valley, and the Flathead area, controlling for a bunch of other factors. We do see those areas having a higher rental rate.
Can you just back up and zoom out and just talk about why that would be? I mean, why would more people drive ag land values up? Why would me wanting to live in Bozeman drive up the land value of the farm that is, a block away from my house? What's going on there? What's the economics there?
Sure. So this is a concept that economists call opportunity cost. So we're talking about the opportunity cost of that land. So if I hold a piece of land outside of Bozeman and I'm currently farming it or maybe renting it out to someone, I probably have the opportunity to sell that land to someone who could develop it. That development, depending on a whole host of other factors, could potentially could likely get a higher return than my agricultural production every year. And so because I kind of hold that card, I have that ability to sell that land and make more money, I can ask my tenant for a higher rental rate.
Got it. So, and the fact that, there's mountains here and it's a nice place to live, we could use that information to predict that land values are going to be higher in the future if we continue seeing these trends, which is, I think, what you talk about with Montana, looking at the Flathead and Gallatin Valley.
Yeah, so even though mountains are not an input into agricultural production,
right,
they end up showing up in land values through that mechanism.
Interesting. So going forward, and we can start wrapping up here, what do you see potentially happening to land values in Montana in the rest of the United States? Do you see them rising? Do you see them kind of staying where they are? Do you see rental rates changing very much? Any insight on kind of what your year to 2 to 3 years prognostication might be? I know economists love to prognosticate, so let's give it a shot.
And we are always wrong.
That's right. Well, we're always great at prognosticating backwards, but not forwards.
Yeah. I think it's this year, because of the amount of variability that we're seeing, it is really hard to tell. So I don't have a good prediction into the future. I wish I did.
Yeah.
It'll, hopefully cattle markets will stay up a little bit. This glut we have on the grain market is not making it look like prices are going to come up anytime soon. So I wouldn't expect rental rates to go up a whole lot, but I wouldn't be surprised if they went up or down a little bit.
Yeah. And of course, you can visit the ageconmt.com website. We are always posting every week. We have a new post that's related to one of these issues. So Kate mentioned, this wheat glut, and one of the posts that I'll be writing this week is going to be about what's going on in wheat markets, and that's also going to be part of this podcast series that we're recording in the next week or two and posting over the next several weeks related to the Ag Conference. And on the cattle side, of course, we just had this China deal where there's a private collaboration between private investors in China, JD.com, which is a huge food distributor in China, and they're actually made a partnership with the Montana stock growers to invest something like $300 million in establishing relationships with Montana cattle markets. So that potentially could affect land values, but it's a wait and see situation, as it always is in ag markets. Oh well. All right. Well, I think this is a great place to wrap up. And of course, if you've enjoyed listening to this episode, you can catch all the archived episodes on the ageconmt.com website. And if you subscribe to the iTunes podcast or wherever you subscribe to this podcast, you will get all the new episodes in your feed as soon as they are posted. So with that, thanks, Kate.
Thank you.
Great to visit with you. And I'm Anton signing off, and may the weather be in your favor.